Mortgage payments are increasing at unbelievable rates, sometimes doubling or more. Americans are struggling to make their payments. Check out these clips on mortgage increases. Don't forget to like and subscribe. Thanks for watching.
So the first year when you buy your home, your newly constructed home, they're only charging you for the taxes, the property taxes on the land, the raw land. Well, the land was only worth $60,000. Well, now that the house has been put on it and now there's a development around you, that now that land this year is worth $110,000, and they put a 400 and something, almost $500,000 house on top. So now your taxes are going to go to correct. So now your mortgage is going to increase. Now, when they done tell you got a fixed rate, you got a fixed payment and all, they not explaining to you that the property taxes will increase that payment.
My mortgage payment is going up almost $500 a month. $500 every month. I have a fixed interest rate, so it's not that. Nope, it's my escrow account. Apparently, my homeowner's insurance and my property taxes just skyrocketed. But nobody thought to tell me about this until I was already $3,200 short in my escrow account. So now I not only have to pay the shortage, but I also have to pay the new balance moving forward. And so I can either pay the shortage in full and my monthly mortgage goes up almost $200 a month, or I pay it out over the next 12 months and my monthly mortgage payment goes up almost $500 a month. Well, I definitely don't have $3,200 just laying around, so I guess this is the option that I have. I'm already working 70 hours a week, so I'm probably gonna have to sell my house because I can't do that.
Guys, tell me why my mortgage went from, don't judge me here, $3,200 a month to $5,600 a month. Next thing I know, I get the first tax bill on the property with land. On the property with the home build. The taxes were $16,000. The next part of this is that being that my property taxes will be this, and being that the property taxes were underestimated for that year of 2023, I believe it was. Now my escrow account is negative $11,000. So now I not only have to get my current property taxes updated into my mortgage. Now I have the rears back taxes in my mortgage. Mortgage went from $3,200 to $5,600 a month. Unfortunately, the home that I thought I was going to be in for 7-10 years, that my kids would grow up in, I'm selling. I'm selling that home because we can't afford it, and I refuse to be house poor and paying for a house that I'm just trying to keep up with. There's no way possible.
Buying a home has been a living, so let's talk about it. We bought our house back in 2023, so we've been here for 2 years. 2 years of constant stress. Obviously, the first year in our home, our payment did increase based on our new value and our new insurance and everything. So it went up probably like $250 or something like that, like a normal amount for a mortgage to increase. Since then, I don't believe anything has changed. Our taxes, our insurance, our CDD has slightly increased. But now they're telling us that we are $10K behind in escrow, and our new payment will be $4,600. From $3,320 to $4,600.
They got me, y'all. And I knew they was going to get me, but I didn't know they was going to get me this hard. It's only been 6 months in this and my mortgage is going up $700. I knew it was going to be crazy because the previous owners, like the people who bought it to renovate it, they were only paying land value, even though the house had been on the market with this current rate and a current county appraisal for X amount of months. But I don't know, somehow they only were playing land value. And then I lost my ID twice. It took them 3 months to send me an ID right before the election. So I wasn't able to file my homestead exemption. And my escrow now has an overage of the amount that I owe in taxes, which is going to put my payment up $700. So yeah, hey.
New red flag in the housing market, mortgage delinquencies. It's a sign of bigger trouble ahead. That's the question this morning. Diana Olick joins us right now with more. Diana, good morning.
Good morning, Becky. Yeah, mortgage delinquencies are still historically low because home values have gone up so much in the last 5 years. But early this year, they began to rise just on FHA loans, which are generally used by lower income borrowers. But now we're seeing something new. In May, a significant jump in the early stage category of all delinquencies. That's 30 to 59 days past due. And according to a new report from VantageScore, they rose from 0.92% in April to 1.03% in May. Not huge, again, but an early indication of financial stress among borrowers. What's more concerning, though, is that these delinquencies were led by borrowers in the near prime, prime, and super prime segments. That is, the least risky borrowers with the highest credit scores. So that suggests that this short-term financial stress is possibly beginning to affect even them. And a separate report from ICE Mortgage Technology looking at overall delinquencies showed them rising 5.2% in May from May of last year, with the most serious delinquencies, those more than 90 days past due, up 14%. Again, delinquencies and foreclosures are still at very low levels. But as more consumers face financial challenges and as it gets harder to sell a home, which it is now, these numbers could get worse. Becky?
Nobody explains this until it happens to you. Let's talk about how your mortgage payment just went up out of nowhere, and it is not your interest rate, it's an escrow shortage. Here's what's going on. Your mortgage payment includes a portion that is going into escrow for property taxes or insurance. If either of those goes up, which they always do, your lender has to cover the difference, and you're going to pay for it. Now your mortgage payment goes up to make sure that you have enough in escrow moving forward, plus to cover the difference that they paid.
But what happened is that we purchased a home last December. We moved into it was our second home, so we had sold our first home and we were able to purchase the second home. It was a beautiful home. The price was higher, definitely higher than our first home, but it was something that was doable for us, and it was our dream home, and we thought that we were going to raise our children in this home, and we were going to have this home for a very long time. And the mortgage was 3832, which might seem high for some, but for us it was fine. We could do that. And so then in February, we received the new mortgage for the year that had like the escrow and all that, and it showed that we had an escrow shortage of $23,000. So our mortgage went from $3832 to around $7,200 a month, $7,200 and change. So $3832 affordable, $7,200, no way we can do that, no way at all.
My mortgage has gone up another $200. So over the last 3 years, my mortgage continues to increase $200. So over the last 3 years, my mortgage has gone up $600. And it's shocking. It is very shocking because I don't feel like people talk about this. Like, people are all, often glamorizing homeownership, but not really talking about the reality of home ownership in today's economy.
Talking about people on here saying that after the first year in their new home, their mortgages are going up $1,000, $1,500, $2,000, sometimes double the cost of their initial mortgage. A couple of things that are going here. They have a FHA loan, which if you don't put 20% down, you have to get homeowners insurance. That's causing a problem. These people are buying new builds. Everyone's so excited about new builds. Yeah, new builds in a developing community. But when you bought the house, it was $160,000. Now that the new community is more built out, the house is worth $500,000, $750,000. Those property taxes are taxing. People are going to lose their homes. They're going to lose their homes. I'm telling you guys, the storm is brewing and it's coming fast. The rate of acceleration on property taxes and insurance is unlike anything anybody has ever seen. People's monthly payments are going up from $1,800 to $2,800, from $2,500 to $3,500. One of two things can happen. You either lose your home to foreclosure because you can't afford that payment, or you try to sell your home so that you can get out of this terrible situation. And the more people that start to now try to sell their homes, the more inventory increases, the more those prices are likely to come down. This does vary state to state, so it's not exactly the same in every state. Some states are in worse situations than others. They weren't kidding. Those f***ers weren't kidding. They said you'll own nothing and you'll be happy.
My monthly payment for my mortgage is going to go from $2,518, which right now I pay $2,530, to $2,714. As you can see right here, the current payment, new payment, I pay $530, just a little bit on the top. Going to begin in August. So it is planning to go up by $196 unless I pay the escrow shortage, which I am planning on paying. So let's do that right now. So as you can see, this is what's actually due, but this is what I've been paying, and we have a shortage. And here's our homeowners and county tax. So we have $1,500 in homeowner insurance and $4,600 in county tax. So here is the page. We are going to pay our escrow shortage only in full, which is $1,281. Look how much money goes interest for our total. That's crazy. So I paid it. There we go. Goodbye, $1,280. So if I took no action, didn't pay it, my amount would have been going up this a month. Since I did pay it in full, it's going to be this. And that's why I say $80, because I do pay $2,530 right now instead of the minimum of $518. But yep, this will be the new payment, even with paying this giant chunk of money off starting August 1st.
I really thought that if I paid my mortgage payments in full and on time every month, that I wouldn't lose my house. That's not exactly what's happening. Our escrow analysis finally came the morning of my 40th birthday. I'm in the bed drinking my coffee at an antebellum home in Natchez, Mississippi, and I get an email, and I'm like, I shouldn't open this like on my 40th birthday, whatever. But I've been waiting for it. I didn't think it was going to be anything. I thought it was going to be like no big deal, like no change. I open it, $3,700, second year in a row, shortage. Our mortgage payment will now be $2,700 a month, which is $600 more than it was supposed to be when we took out the loan. Isn't that fun? Yeah. I can't pay it. I mean, like, we can't pay it. It's insurance. Our insurance is going up $400, annually. So I called my insurance agent today, and she was like, okay, so that was last year, because, like, they did that, like, for the previous year. So she was like, okay, that was last year, but I did get yours a couple days ago for this year, the renewal, and it's going to be going up another $300 this year. If it went up $300 last year and we're at $3,700 shortage, even if, like, I pay the shortage in full now to keep the thing the same, the payment the same, we're just going to have another $3,700 shortage again next year because insurance is still going up again, $300 again. I'm calling the mortgage company tomorrow. I'm depressed, like, obviously. I'm unmotivated to do anything. I'm not getting things done. I need to call a realtor to find out what needs to go on because, like, June 1st is going to come and, like, I'm not going to have $2,700 to give them.
We're starting to see more people default on their mortgages, but what's surprising is where it's happening. California, not talking about you. Florida, I am looking at you. We're going to get into all of the different reasons why and what other states we're seeing the greatest number of mortgage defaults. The first thing to understand is that FHA loans have the highest number of defaults right now, and FHA loans do not require as good of a credit score as conventional loans. VA loans have the second highest number of defaults currently. Now, what are the different reasons for the defaults? Inflationary pressures, lack of personal savings, consumer credit card debt, and natural disasters. Typically, Louisiana and Mississippi have the highest number of mortgage defaults. But if you're looking at the latest quarter of increases in mortgage defaults, Florida's number one. Florida, followed by South Carolina, North Carolina, Georgia, and then Louisiana.
So this message is for all my homeowners out there. How y'all feeling? Yeah, y'all got that email yet saying y'all property tax done increased this year? Yeah, that insurance rate just going up higher and higher, ain't it? Yeah. Yeah, we just got an email this morning saying our mortgage payments done went up substantially. Yeah, so at this point, Uncle Sam, I'm gonna need to see you outside because we gonna have to squabble. I'm gonna need that fade. Everybody talking about, oh, you need to buy a house, yeah, until that mortgage rate go up, till that escrow payment just skyrockets. Oh man, and don't let nothing need to be fixed in the house. Yeah, you remember back in the day you used to call maintenance, hey maintenance, can you please send someone to 304? My AC unit is out. Yeah, let your AC unit go out now. You scared to call someone. You steady opening windows because you already know that bill gonna be higher than Smokey in the pigeon coop.